Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 17th, 2012. Lots to talk about, so let's get started. Alright, tonight I'm going to start off talking about the US dollar. I figure we're talking about this because the inverse is obviously going to be what happens on the S&P 500. I still have this 85.23 level up here, which is a mathematically calculated level. I talked about tagging this line here, which is the 50 moving average, and this pivot point. We came close to it before reversing, and this reversal candle is definitely a what you call a somewhat of a piercing pattern, and because it's a down move, and then the candle opened from the bottom and then closed above 50% of the previous day's candle. Okay, to this little candle here is after hours trading, so don't pay much attention to that. We actually broke through this 382 Fibonacci level after bouncing off the day before. We broke through before making a recovery, so I can pretty much take away this fib level here. And I'm going to save this drawing real quick so I don't have to talk about that again in tomorrow's video. So right around this area over here is where we're going to have a lot of resistance. I still don't see volume that verifies this move today, or not verifies but validates this move today. The move in the dollar was a pretty big move higher on very little volume, so that tells me that there's a possibility that this may be somewhat of a trap, if you will. But the pattern is there. There's a two candle piercing pattern here. It's not exactly a engulfing pattern. We did go right into this 20 moving average here, which could constitute a pullback on tomorrow. Okay, so we're gonna need to watch that because, like I said, this is an engulfing pattern after a down move here, so this would validate a possible reversal. I would like to see, however, it happened on higher volume. That did not happen, so the odds of it happening is less. There is still more odds that we will reverse up higher tomorrow, but the odds are definitely less without the volume. So there is a potential, obviously, that the SPY could start heading back down tomorrow. That's always a possibility. So let's take a look at the SPY. So this is a chart of the SPY, which is the ETF that tracks the S&P 500. Okay, just a brief history. We have this descending wedge here. We broke out of this wedge at this point here. Let me move this line out of the way. This is not an actual candle here. Okay, and then what we've done was we simply consolidated above the 20 moving average. Okay, so that validated that we could possibly move higher, and that's exactly what we did today. So let's kind of zoom in here. I do have a level here at 135.06, which is a calculated level. Don't mind this here. This is just my alert at 135.02. If it hits 135.02, then it'll send me a text message so I can get on it. And then I do have a calculated level here at 135.44. Okay. I kind of wanted to talk a little bit about this 135.44 level. Let's take a look at the hourly chart. Now here's something to think about on the hourly chart here. Let me remove these lines if it lets me remove it. Okay, there we go. On the hourly chart, we're pretty close to this 135.06. In fact, we're close enough to say that there is a possibility we may actually pull back tomorrow. But this 135.06, just keep in mind that I'm going to need to see a reversal pattern in the candles to take a what do you call a day trade off just 135.06. I wouldn't use this 135.06 as a swing trade in my opinion. But if we go into this 135.06 and then it looks like that we're gonna have a reversal on the candle pattern, then I'll probably take it. And what I'll probably look at is either the half-an-hour chart or the 10-minute chart to validate that. In a day trade, I normally look at the 10-minute chart. So just keep in mind this 135.06 is more for a day trade than a swing trade. And then we have this 135.44. Let me talk about this 135.44 a little bit more here. If we say we consolidate a little bit on this hourly chart here, and then we go into this 135.44, then yeah, I may actually take a swing short on that. In addition to this 135.44, we also have this level here, which is at 135.76. That 135.76 coincides with this fake print here on this candle here. So that a lot of times we're gonna get resistance on that. Whether or not it be a day trade or a swing trade remains a question. A good level, in my opinion, would be this level all the way up here. This level here is at the 137.32. Okay, let's look at the daily chart. Now this is where it gets a little bit tricky. The 135.44 level could get actually hit tomorrow, or we could actually reverse tomorrow. Wednesday, Uncle Ben actually speaks, so I think that's gonna have a great effect on the market. Whether or not the market prices in what Uncle Ben talks about is the real question. Now, the 50 moving average is really close to this level here, which is the 135.06. So at the 50 moving average and the 135.06 calculated level on a day trade, wouldn't be such a bad idea in my opinion. The 135.44 is right near this 135.76 level. So what would I do? I would probably take it at the 135.76 if the pattern looks ripe on the intraday. But my most likely trade will be this level right here. I mean, in all honesty, at 137.32, if it can get there, I doubt it even gets there. Well, actually, anywhere in between here. So 136.60 or around there, that area, or even 136 flat. There is a potential that it goes up to 139.98. Yes, that is a possibility. I don't think it gets there though. I mean, it really doesn't look like it. The markets aren't as strong as I would expect it, and the volume has been very light. I think everybody's anticipating Wednesday when Uncle Ben speaks. So, in all honesty, if we can get into this 137 level by say within the next couple of days, then I'll probably take that short. If the market, and that's only if the market looks strong. If the market starts looking weak to me, then I'll probably take it in between this 135.44 and this 135.76 level here. Okay, and again, this 135.06 would just be a intraday trade in my opinion. Okay, so that's the SPY. All right, so we have a huge drop on the VIX here, right? You see this pattern here. This one 1949 level. I don't know why it's still in there, but it was already tagged once, so that level no longer is valid. We're gonna get some support here on the VIX, and we're definitely gonna get some, very minor support in these levels here. Your major support is gonna be right here in this level here, if it can even get there, and then of course, probably all the way down here, depending on how strong the VIX looks. If you think about it, these two levels here and anything in between these two levels here, I doubt the VIX can get by. Okay, so I'm expecting some support coming into the VIX very shortly. Okay, I do not have a calculated level for the VIX yet. I'll probably put that in for the next video. Now let's talk a little bit about some stocks here. We have Apple Incorporated. Apple actually got a little pop. We kind of talked about this in the previous videos. I do have a level here of 590.36. This is a new level that wasn't in other videos. I don't believe. I would have to look at yesterday's video, but I did put in this 590.36 level as an intraday trade. Let's take a look at the intraday chart. Okay, so right now Apple has come up, consolidated. Actually, Apple is consolidated more like this way here, right? And then this would be the breakout point, which Apple broke out, right? And then came back down, went up, and then pretty much it's just trading in this above this 20 moving average here. If it can hold the 20 moving average, then I expect another pop into this 590.36. In which case, there is a possibility that I could actually take a short position here as for a day trade. Okay, now the big trade to me would be the 607.62 level. Over here, the 607.62 is easier to see on this on the daily chart. Let me just remove those little lines there. There is a possibility that we could also get all the way up here, which is around the 619.38 level. Okay, so that I wouldn't rule that out. That is a possibility. In fact, there is a possibility that we get all the way to a double top. I highly doubt it. But somewhere around this level here is where I would probably take a swing short, and then this 590.36, depending on the pattern on the intradays, when I may or may not take an intraday short. We're already pretty close to this double top here if you look. So it really depends on if this 590.36 actually holds or not. And that'll be the big question. The intraday levels, the mathematically calculated levels, aren't as powerful as the daily mathematically calculated levels. So I'm still in the boat that 607.62 should hold up pretty well, and that coincides with the markets actually turning over. Then that would make sense to me. Just keep in mind that Apple is a very strong stock right now. I mean, everybody knows that Apple is pretty powerful. The markets could be going down and Apple would be going up. It's not a problem. Apple was up at $11.65 today. I mean, and the markets didn't even go up that much. So, Apple is definitely still a stock in relative strength. It's still holding these all three moving averages here. Okay, so just keep that in mind. And then last but not least, we have Walmart. Let me load my drawings here. Okay, so Walmart, were these two levels here. In fact, I can probably now I won't delete it because these are now going to be support lines. But there is a possibility that if we do get another spike into that 137 level on the SPY, that Walmart could actually hit $70.56. Now Walmart was somewhat of in weakness. Per se. I mean, it was up only 37 cents, but right now what I see is Walmart just consolidating sideways here for another possible pop up into the $70.56. But just like Walmart, if you look at Walmart, I mean, look at all these moving averages here. I mean, Walmart is actually in a better position than Apple is in right now. I mean, if you think about it, Apple was trading in between the 50 and the 20 moving average, and Walmart's trading all above it. That tells me that Walmart is in a very strong position right now. So shorting Walmart would probably be pretty hard. But if you are able to catch the top on Walmart, then you'll probably reap some nice rewards on that one on the short side. Okay, so this is your 7-minute market update. God bless to you all. Thank you for watching, and we'll see